Morning.
Well, good morning, Gav. How are you, mate?
Yeah, good. Nice to be in sunny Queensland.
Yeah, good to have you up here. Mate, another interesting week in the market as always.
Yeah, I mean, the commentary is split between interest rates are rising and the jobs data comes out and interest rates are flat. It just goes to show the economy is sort of bubbling along pretty well at the moment. And I think we'll just have to wait and see what it looks like into the next year. But I think with all the big data points out of the way now, with a bit of luck, we'll see a centre rally.
Yeah, well, that's certainly what we're looking for. Obviously, the US rate cut this week. Talk about potentially one rate cut next year. We also got a change of Fed chairman in the middle of the year. So Trumpy might get his man running the Fed, which could see maybe a second cut on the books. But certainly at this stage, probably just one cut at this stage for the US market. And then really, I think for us, I think the RBA is most likely going to remain on the sidelines. Just doesn't seem to be any ability to cut rates with CPI running where it is. So it's going to be some interesting few months ahead.
Yeah, I think the seasonal data over Christmas is when it comes out early in the new year will really play into what the next move is. I think at the moment no one really knows, but most likely flat for a while, I think.
Yeah, very true, very true. All right, well, let's get into our couple of ideas for the week. So our first one here we have is an ETF. It's STW is the code. It is basically an ASX 200 ETF. It mirrors the index. Great way to play off exposure to the broader market. And obviously, if we do see this Santa rally, which I think we've both spoken about, this could be a really good opportunity to pick up some good premium. If you do get exercise, you actually get physical delivery of the ETF, which is certainly a good product to hold. It'd be for most portfolios, it'd sit pretty nicely inside a broad portfolio.
Yeah, I agree. It's one of only two or three ETFs you can actually trade options over, so it's a nice broad one to trade.
Yeah, definitely. Look, and obviously, we've a couple of fairly strong moves in the US, which we haven't really followed as probably as hard as we should have. But as we're looking for that Santa rally, probably starting from early mid next week. We've already had a pretty positive open today. Whether we can hang on to that will be interesting, but definitely for a move into that mid January, I think this selling some puts in the STW would be a good position to take on.
Yeah, nice one.
Now, what we
Oops.
had our second idea, we had selling some calls.
Yeah, so I mean, if you look at all the resources at the moment, the last few weeks, they've just had an incredible run up, and Fortescue in particular is now way above any of its price targets. So
Yeah,
if you own the stock, you could look to trim it, take some profits, or certainly look to sell covered calls as reasonable premium in it. And with the price targets like that, I think you'd be pretty happy to sell it around these levels. So it stands out. BHP is a little bit different in the price targets are a little bit more spread, but certainly Fortescue stands out at the moment.
yeah, definitely. Look, I think selling Fortescue calls something I've spoken to a few clients about this week, and also BHP calls. I do think BHP, anything over 45 looks pretty full. So I think if you could write a 45.50 or 46 call, get some nice premium in. If you do lose the stock, for in the case of BHP, be plenty of opportunities to buy it back over the next 5 or 6 months. And same with Fortescue. If you lost the stock around 23 to 23.50 on a sold call, I think you'd have ample opportunity to buy it back a fair bit cheaper as 2026 rolls on.
Yeah, I agree. Agree.
Right, and our final one was look, a stock we've done a fair bit in over the time and done pretty well out of, but it's had a real ordinary run, I suppose, since October, being QBE. And look, if I could probably put Suncorp in mirroring QBE as well. So the two insurance stocks have performed really poorly against generally pretty solid research targets. Both Suncorp and QBE have probably got 5 to 10% of upside to their consensus targets. So we think there's probably good opportunities to sell some puts under either QBE or Suncorp. In the case of QBE, I think you could write the $19 put for Jan and probably get some nice premium there. And if you did take the stock up, I think you'd be taking up at a pretty attractive level versus consensus targets sort of in that $22 to $23 price range.
Yeah, those targets, I mean, 17% upside to the average consensus is a fair way up there. And its technicals don't look that, technical chart doesn't look that good. But, with the fundamentals there, I think if you want to pick the stock up, selling puts would be a really good one.
Yeah, mate, I think that's a good one, definitely. A couple we didn't throw in. Look, the energy sector, I think there's some opportunities there. Woodside looks pretty soft around that 24.50. That could be another one for investors to look at. Picking Woodside up it's sort of under 24.50 would be a great price via a sold put. So another one clients could look at
Yeah.
for a sector which we think is a little bit downtrodden, and with a general positive view for the overall market, I think we will see a bit of improvement in those energy stocks.
I think you're right. Nice one. Righto.
All right, mate. Well, next week we're going to do a bit of a summary of our last sort of few months, just to give people a bit of an update on how we go with our suggestions, and maybe a bit of a final comment for the 2025 and maybe a 2026 forecast.
That's
So
it.
look forward to seeing you then.
Great. Thanks, Ed. Talk to you again soon.
Thanks, mate. See you, bye.
Bye.